Depending on what time frame you use, each indicator is going to change. If you use a moving average on a 5-minute chart, it's going to be much different than what the moving average is on a 15-minute chart. So so studies in general, they change once again dependent on the time frame. So it's hard to have a solid base of what everybody is looking at because there's so many different discrepancies and there's so many differences between its studies depending on if it's an investor who's looking at maybe a daily chart, whether the investor is looking at like the 20 EMA on a daily chart or the 20 EMA on on a 5-minute chart, which a day trader would use. Those moving averages are going to be completely different. The price points are going to be completely different. When you're looking at like the MACD, RSI, all these different indicators, they all change depending on which time frame you're looking at. But what if there was an indicator that was the same across multiple time frames? It was the same across all time frames. So that way every trader knew exactly where that indicator was at exactly what price. And that's the indicator we're going to go over today. It's called VWAP. And this indicator is universal. It's shared no matter what time frame you're looking at. It's always going to be the same. So let's go ahead and dive into some examples. And I'll show you how you can use the volume weighted average price, or VWAP for short, in your trading. Let me just close this down. Alrighty, so we've had quite a bit of recent runners, and let's go over a couple here. You can see here with INDO, you can see that, let me remove these studies here. You can see that once the stock came down below the yellow line, the yellow line is VWAP, and it came back, popped up right through it, and then it pulled back into that level again in the VWAP. It bounced there. You can see how it bounced and held every single time, how perfectly it is. Now this is a 5-minute chart, and you can see how great this is. Now if we change it to a 1-minute chart, it doesn't change. It stays the exact same thing. You can see how the stock bounced and it stayed exactly the same. It didn't change at all. Now if we added a moving average in here, you can see that the 9 EMA here, this is an example of how moving averages change. This is the 9 EMA on the 5-minute chart. And let's go ahead and pull up another 5-minute chart up here, and you can see, let me just change this to a 1-minute now, and you can see this moving average 9 EMA on the 1-minute chart is way up here when it's not even close on the 5-minute chart. So you can see that right now my cursor, if you're looking at the top screen here, this 9 EMA is here, but if you look at the cursor on the 5-minute chart, the 9 EMA is way down here. So the EMAs change depending on which time frame you're looking at, and it's not a good thing because it creates a lack of like consistency across time frames. But the good news is when you're looking at the volume weighted average price, it's the same across the 15, it's the same across the 1-minute, it doesn't change. And that can provide some very good support and resistance points that every trader can see, pullbacks, and all kinds of cool stuff like that. So let's just take a look at the 5-minute chart once again. We'll zoom in on the yellow line. Let me get rid of this moving average. You can see that how the stock reacted to VWAP here. Like I said right here, you can see that it was let's just go for a live example. So you can see that every time it pulled back into that VWAP, it bounced. Let me just get rid of these studies. And you can see how it held trend on that volume weighted average price until it broke out. Now what you could be doing is you could create a strategy where you're buying at the volume weighted average price when the stock pulls back. That could be a strategy. Or like you can just see how great it's holding here. Or you could do a breakout strategy where if it loses the volume weighted average price, you can buy breakouts where it breaks above it. You can see this. You can see right here how it tried to break twice, but it failed. But then right here, you can see a big spike in price there where it broke out. And then it pulled back and it kind of held there, lost it for a little bit. But then you can see once again, when it kind of started to get away from the volume weighted average price right here, it slammed back down, pulled back right into it right there, and held. And then you could have been a buyer at the volume weighted average price, and then it started to break out. Also, another good way you can use the volume weighted average price is to gauge the extension of a stock. So you can see how at this point, once the stock made a big move up, you can see that it left behind the volume weighted average price way down here. Now you see that it's really far away from the volume weighted average price, and now you can say, hey, I don't like buying stocks when they're that far away from the volume weighted average price, because I know that it's extended. It's already made a big move up, and it's really far away from that volume weighted average price. And so now I want to wait until the stock corrects, comes back down to that level, because that's when the stock tells me that it's fully rested. So let's go ahead and take a look at some other examples here. Here's another good example. You can see that you can just see how it's just reacting to the volume weighted average price. You can see just starting right here. Let me just go to a 1 minute chart. You can see how actually it wasn't really holding too much of a trend there. It kind of got away, but you can see how it bounced here. It lost it here. So you know that if it goes below it, that means it's kind of getting bearish. If it breaks above it, it's bullish. And then it pulled back here, and you can see how it kind of just bounced off that yellow line until it decided to make a pullback, or decided to break out. And then you can see what happens right here when it slammed back down and bounced right off that. So it's really cool to see it in action. It's really cool to, have this solid indicator and to have a good reference point. And I think that if you guys don't have the volume weighted average price on your screens, especially if you're a day trader, I would highly suggest putting it on there. It's a very useful tool, and you can create full strategies around it. Look at how beautiful this breakout is right here. You can see that it bumped its head, and then it broke out. And you could have been a buyer on this breakout, selling into this pop here, maybe risking right here below the support level, or you could have been a dip buyer right here when it slammed back down, and then you can see what happened once it bounced off the volume weighted average price, and then it made another move up. So this is just me a quick video, guys, on the volume weighted average price. I think it's super critical. There's so many strategies that you can create around it. It's an indicator that almost every day trader that I know uses, and it's a good reason behind that, because it's a solid indicator that lines up across multiple time frames, and it gives you an idea if a stock is bullish or bearish depending on if it's above it or below it. And it also can give you a sense of extension, how far the stock is extended. And if it's really far away from that volume weighted average price, then you know that it's probably maybe not a good buy, that you should wait for it to correct and come back down. All right, guys. Well, I hope you enjoyed that video. Just a quick one. And if you have any questions, comments, please leave them below, and I'll make sure to get to them. Have a good one, guys.